Hello and welcome to our viewers on Crux Investor. We're here today at the WNA and we're with John Borshoff, and he's going to be talking to us about his experiences at Paladin and also his new story, Deep Yellow. We're going to talk about a variety of topics. If you look in the description below, click on the relevant timestamp, that'll take you to that part of the video. And if I could ask that you subscribe to our YouTube channel by clicking the button in the corner of the screen. And if you want more videos like this, click the alert button as well. Let's talk to John. How are you, sir?
Very well.
And you're over here for the WNA.
For the WNA, and then to do some few other sort of promotion.
Few other promotion things.
Yes.
So what are you going to get out of the WNA?
Well,
what are you hoping for?
Well, you always hope that something magical will come out of the system, but it's an industry that moves by degrees, and
right.
and it's the subtle developments that are really the ones that will I believe show the biggest impact. I think there are some things happening now that are indicating that there is a shift in the perception of what nuclear can contribute, and it's all built around your sort of ideas around climate change, zero emission, pollution, and if you believe that, well, the nuclear sort of question becomes much more relevant.
Yeah.
And there's it needs a cooperative effort with different fuel mixes to achieve the ultimate goal. And it's not this one or that one. And at the moment, there's a bit too much of that.
So, I mean, you've been in the uranium space a while, right? You've
Yes.
seen it all,
Yes.
ups and downs.
Yes.
But what was happening before? So I've got people like Mike Schellenberg and Bill Gates and Elon Musk talking about this nuclear green revolution. They didn't talk that language before. We didn't talk that language before. So what's happened?
So that's part of what I was just saying, that now there are sort of serious people almost shifting camps.
But why?
And why? Because when you look at the whole basis of what electricity means, what energy you need to output, what that means to the atmosphere, and forgetting about the climate, just the atmosphere and pollution as distinct from carbon emissions and all of these sort of issues, and people are saying that the renewable story has oversold, because if you're looking at an audience that wants the fairy at the bottom of the garden, and it's such a nice story and a happily ever after story, it's less questioned than something that has all the perceptions of whatever you might want to imagine with nuclear. And so whether the technology can outperform anything, and it's not a 100% solution, that it has a harder time coming into the focus. So these guys you mentioned, they have seriously thought about it, and they've virtually crossed the line in terms of getting these arguments out, and I think that's that groundswell that's happening.
What's interesting that it's almost, and I don't want to stay on this too long, but it's almost like anti-wind, anti-solar, because it doesn't stack up in their mind, and we should move on. We're here to talk about your. Well, it's not a new company anymore, is it?
No.
It's you've been there a while. Deep Yellow. So give us a 1-minute summary on Deep Yellow.
Deep Yellow was a company that started in 2006. I helped form it from Paladin, that I founded, and it was going to be an exploration arm of Paladin because we were in a development phase. So they proceeded and didn't do that much, but they were a company that kept themselves together, didn't venture out, and when I then left Paladin in 2015, I was going to sort of retire or just do board stuff and just die of boredom. And
that's board stuff.
Yes, that's board stuff. So it hit me that there's another phenomenon happening which not many people are seeing, and I thought I'd give it another go. Not like Paladin when it was a contrarian on a demand dynamic, but this one contrarian on a supply dynamic. Okay. And there are many issues why this is the case. So I chose Deep Yellow because it was the only company that had no complicated share register, had no Chinese in it, it had no private equity in it, that they'd come and loaded in.
How many shares are there?
There were 1.9 billion.
A good Aussie company.
Yes,
right.
and I sort of consolidated that down to about 140 million.
Okay, great.
And that's all been done, and now it's sort of sitting
Yeah.
on about 240 million
Right.
with
Okay.
raisings.
Okay. So you come in there with a
Yeah.
view
So-
about how you want
Right.
to change things up. So what are you
Okay,
thinking?
so what I am a real advocate of Namibia. It's got a jurisdiction that works. It's got the government, departments have got an understanding of how to deal with this product. It's got a great environmental mechanisms in it that don't sacrifice the environment, and you can develop quickly. So in any strategy, you need a project, you need a jurisdiction where you can move it quickly. And I knew the targets, and I felt they were under explored,
Right.
which has subsequently proved to be correct from the results that we've achieved. So that was one part. Enhance the resource base in Namibia, and also then develop a multi-project global platform, and because I think the world needs that. I need a multi-project. I think it needs a company that can not only offer production certainty because of management that's delivered before, but also you show the consumer optionality in production, longer life, things in the pipeline, and these are as important as your first production.
So that mitigates a lot
Yes.
of jurisdictional risk,
Yes.
and even
Yes.
exchange risks,
Yes,
and
yeah,
all of those
yeah.
wonderful things, political risk.
Yeah.
But that comes at a cost.
Yeah.
Literally
Yeah.
a cost.
Yeah.
You've got to fund that. You've got to be able to develop those assets
Yeah.
independently. You need more people
Yes,
spread around the world.
yes,
So don't you
So
see there's a liability?
essentially, when I moved to Deep Yellow, the core team that helped me develop Paladin are with me.
Yeah.
And they're part of the dream too, you know. At the moment, some of those guys are on part-time, but all waiting for when we sort of get this full or you never get to the end stage, you just get toward it.
Right.
So the whole idea is in a contrarian sort of philosophy. I mean, everybody's got ideas, you know. In a property downturn, everybody knows that, if I bought this property now,
Yeah.
you'd make money. But the whole idea with ideas, and particularly contrarian ones, you need people that have faith in your contrarian idea and will back you for funds, because funds are the shortage.
But the market's also got to work in your favour. If I
Yes.
use your analogy
Yeah.
of housing, you know,
Yeah.
I think that was definitely the case of housing.
Yeah,
If
yeah.
the market took a downturn,
Yeah.
you buy at a discount,
Yes.
and then you sell
Yes.
when the market's
Yes.
back up again.
Yes.
These days, with more houses being
Yeah.
built,
Yeah.
we're not seeing those
No,
uplifts as
Yes.
big as much
Yes.
as we did. The
Yes.
same in it's definitely uranium, and
Yeah.
we've seen it
Yeah.
in various other commodities
Yeah.
too. So contrarian, does it mean the same thing as it used to do? I know Paladin was built
Yeah.
off that
Yeah.
thought.
Yeah.
Do you think times have changed, or do you think there are lessons still to be learned?
They have changed in a way, but still lessons to be learned. I think there's still, when you look at all the juniors and all the deposits, and there's about, from 400 companies, there's now about 55 companies, of which 10 are sort of government-related organisations or multinationals, and the rest are sort of, apart from Cameco and what was the Rio, which are now getting out of the system, are relative sort of juniors, working on deposits that were known, from post-Chernobyl. They're just the same, vehicle, repolished, rejigged. And on that, there have been promises made for 10 years, 15 years. So, you start getting fatigue in boards. Gee, when's this thing going to happen? If it's going to happen, and so the real opportunity is that you've got to. I think we lend a particular brand. I think we've got a recognition in the global markets that we delivered on what we said we would deliver with Paladin, and so getting if we do any merging or bring a company or a deposit with us, it's a 2 + 2 makes 6. It's not just a cumulative itself, because we add other dimensions to those assets and to what we acquire.
But like what? I mean, Paladin, and I hope you made some money on the way up, had a dramatic fall away. And, that's clearly a lesson about how markets operate. Not necessarily, you're not always in control.
Yes.
So try and help me by articulating or painting a picture about what Deep Yellow is going to be doing, having learnt what you learnt at Paladin, because I read this, you're very much focused on the macro story, because I think everyone is, because you're desperate for everyone to understand the macro story, and we can talk about that in a second, but what specifically is different about your company versus the other 45 juniors plus 10 government-owned operations?
I've got and I've always said it, even when I joined the Deep Yellow group, that I thought the upturn in the uranium price was going to be longer than people thought.
I noticed that. You were talking about 2021, 21, 22 in here. That would make a lot of people nervous. Certainly investors. Certainly some of the funds, because that's not the language that's being talked about. So why do you say that?
Well, and that's where I give optionality to the investor. The investor that says, this guy's got something that resonates, or that they listen to the other ones and think it's going to be a short. Well, they can take that option, or bet on both.
Right.
But the uranium market is opaque, and it's the way it's evolved. The way it's its genesis is from military people that came into the commercial and carried on a lot of those I don't want to show my cards, opaque. Right. So on that, all sorts of things happened that makes the market interpretable however you like.
Right.
And and I think that when you look at the structural degradation of the supply sector, and it's really built around what Chernobyl did to the industry, what Fukushima did to the industry, what's left today, and who are the builders.
Right.
And the investor's got to say, who are the builders going to be? And this boom, everybody's going to rise with the tide of the uranium increase. Yeah. But this boom coming up will be on delivery of supply. On absolute delivery, and
so what does that mean for you though? So you're working in Namibia. It's a good jurisdiction. It's I would say lower grade, but a lot of it. Yes. You got people like Bannerman, Boss.
Forsyth.
Forsyth. So it's a great jurisdiction.
Boss is not there, but Boss is in South Australia.
Right. Okay. Sorry. And so it's a great jurisdiction.
Yes.
All of that good stuff, mining law, taxation, all of that great stuff. You're looking at other jurisdictions, but what is, I'm trying to get in the mindset here of what you're building, because I get the mitigation by doing getting different assets around the world at different stages and buying them cheap, presumably. Hopefully for you, you want the price to stay low for a while, right? But what is it that you're building? Why invest in you now? What are your current shareholders thinking?
So, and you've got to take this at two levels. First of all, the Namibian focus, and also what we did in Namibia and in Malawi, building those two mines. And not only did we build those, but we innovated. We put a new processing into place. There was patenting of those, and so we did a lot more than just discover a deposit and looked around for processing analogies and just reinvent those, which quite a few companies have done. So we then sort of got a project that looked like a tier 3 project at those low grades and turned it into a tier 1. And even in that whole process of innovation, which we're running, sort of 400-500 ppm run of mine material, we still have other options of improving that efficiency of that processing. So we have out of that as our sort of, let's say, a starter project, we have firstly authenticity, in terms of that we have built things and we know what we're doing.
Track record,
That's
unquestionable. Right.
Secondly, we have belief that we are improving. Even in the last 2 years, we've increased the resource base by a factor of nearly 3 times.
Yeah.
Where, before people had spent about $50 million over 10 years, and we the resource base was what they got, and then in 2 years, finding that key to the gold room, we spent $5 million and tripled the resource. So all of that, the jurisdiction that we can really deliver on production when it's necessary, timed at a time that I think is relevant, not really using, and you've got to make some sort of prediction to say, well, look, we're in a downturn. The financing and all of this is probably not going to become in the frame for a couple of years.
Right.
So then you'll get that. Who do you take a punt on? So all of that is where I think we offer distinction in.
But how do you, this is the bit that I don't understand, is you've got this contrarian attitude, strategy, right?
Yes, yeah.
You want the price to remain low for a while.
Yes, yeah.
How much cash have you got?
About 17 million.
17 million, okay. So that's not going to get you too far, right?
No.
It's not going to get you to do the things you need to do, want to do.
Yeah.
But while there's a downturn, these funds, not a lot of funds playing in the uranium space at the moment, they need to see some signs of the price picking up, which doesn't work for you.
Yes.
So how are you going to go and raise capital to go and buy all these assets all around the world, operate them or develop them to a point where they do become valuable? Because if I look at your share price, you've been doing all these wonderful things, mining-wise.
Yeah,
but you've been hit, right?
Yeah, but you got to
so
look
how do you
at
balance
it.
all that?
So basically, when I first came in 2.5 years ago, I raised $15 million with an asset that nobody believed in, with uranium future nobody was uncertain about, and people said, "Oh, look, I've done it, I'll back it." So that was stage one. That was in June of 2017. Then in June of this year, I wanted to diversify our share base, the share capital with different shareholders. So, and I have a plan, and it's announced in the capital raising I did in June, is that to initiate an assessment of those projects that I think are available and to grow the pipeline. And I had 3 institutions and private, very, very sort of wealthy private family funds, and we raised $11 million.
Okay.
And they knew that this was only the beginning, and that for me to succeed in these objectives, they would have to pour more funds into it. So I'm already preparing that future.
So they're going to follow the money.
Yes.
For all your needs going forward.
Well, they and then others obviously will build around that.
Will there be any others? Because say when I talk to people, not many people get it. They don't necessarily buy into the macro story yet.
Yes.
They need to see some movement.
Well, I'm getting early signs that the average raising that's made by juniors, they announce, "Oh, we've raised 1.5 million. We've made 1 million." You can't do, and we another 11 million comes in. And when you look at the results, when you look at the share price, they go, "Oh, why is this happening?"
Yeah.
And I think that people have really got to, poke their nose behind the curtain and say, "Well, why? There must be something." The story is all built into the, and I can't talk very much about M&A, but it's all there in note, in presentations, in what I write. And so I am building that part in terms of, without funding potential, you cannot realise the dream. And the other thing is that I've been having other companies approaching me now to say, "Look, can we do something together?" And I know why.
Mining companies.
Yes.
Right. Okay. Yeah.
Because who
have got assets.
Yes, who have got assets.
But isn't this a case? A lot of this is your track record, right? With Paladin.
But
is it about the assets, or is it about their belief that what you can do with the assets?
They believe in their assets, but they can't get traction to convince the market this is
running
possible.
out of cash.
Yes, and running out of cash, and saying, well, where's the team? What is it? Where is it? How are you going to... And people realise that to get into believability, look, with gold or copper, there are hundreds of managements in this world, hundreds of companies that are competent, proven, and everything. And all you have to look at is the decimation of the industry with Chernobyl and with Fukushima. And nobody made a career sort of decision to come into the uranium part of the business after Chernobyl, up to for 20 nearly 20 years. So that's decimated the market. Then
in terms of the
skill sets to actually deal with the whole uranium question.
See, again, I think that's interesting to me, because when I've interviewed a lot of these junior companies, and I'm looking at them and they're telling me whatever commodity they've come from, it's the same as uranium. I do have to smile slightly because it's not.
No.
In many ways, mining is mining, and the same drivers are still there. But the geopolitics, which is something I've talked about a lot with people like Mike Alkin or Dustin Garrow or lots of other funds and influencers. It's a very different market, because it's not a case of you get gold out of the ground, produce gold, and sell it into an open market. It's much more complicated than that because of the buying and the buying cycles. So I'm looking at these junior companies and going, I'm not quite sure how you're ever going to get into, you maybe get into production, but how are you going to sell? There's lots of bits missing. So are you thinking, when you're talking about this diversification of assets around the world, are you talking about going into existing companies who've taken projects quite far along the line, or are you talking about pure exploration?
No. People that have taken projects, they may have a resource, they may have a feasibility study, they may have this, they may have that.
Got it.
And that's the only assets I'm looking at.
Sorry, I've only just twigged what the strategy is. That is fascinating, because that's a fast track, and you're bringing skill sets, knowledge, know-how, connections to people who, quite frankly, should never have got into it.
Yes, and they're good guys and all of that, but just to follow up on one of your comments, and I'm not trying to blow my own trumpet. I mean,
go on.
Do
it.
But I just say that most mining industries, except maybe now a little bit coal, are what I call trucking industries. They are accepted. They do the job. They're not questioned that much. And if there's an accident in that, it's page 4 in the newspaper. And also the mining engineer and all of the people, they don't have to intellectualize beyond the mine gate, So come into uranium. And the only analogy I can make is it's like an airline industry, like a Qantas or a BAA, or really top. So the brand there is excellence, competence, very small tolerance, and it's not just the guy flying the aircraft that's important. It's the whole stakeholders built around you sitting in that seat, being taken.
No, I buy that, but in many ways I take that as read. Okay, the bit which I think is missing is once you've worked out how to economically get it to surface, is how you get it to market. The logistics around that. Can you get it to a port? Can you get it to the end buyer? And can you indeed get the contracts? Your more pressing issue, if you do this strategy, is can you, John Borshoff, go and raise money in the market to deliver these projects?
I believe absolutely I can.
You still got those contacts?
Yes, and I have and what we did as a team have, really good relationships with many utilities.
Right.
They know that Paladin was the only junior out of 400 delivered on its word and delivered on the product that it said it would deliver. And everything up to Fukushima went like a dream. There was nothing to be flawed about that.
What was the secret sauce with that? Because I mean, the rise was stellar. Was it your ability to get contracts?
No.
Or what was it?
No. It was firstly understanding the whole, where uranium was, what it was, what it is, and where it's going to, and how that fitted in and blended with the utilities and all of this.
Right.
And an industry that was in the wilderness, and very few people sort of crossed over that from the pre-Chernobyl into this new phase. And many of those that did were, sort of junior geologists or junior engineers. So they didn't see it from a corporate strategic level.
What was happening?
What it means is that a lot of the guys that came into the industry in the Renaissance with the in the sort of 25 to 10, their experience was very siloed.
Meaning
that they were either a geologist and did their geology and did this, or meaning they were a mining engineer or whatever, and they then tried to assume the mantle of understanding the industry as a whole, and read it and played their strategies around that.
Okay.
And so when I came into it, that I had a real belief in terms of what the brand was that a uranium company had to be, and not just flagging the deposit or flagging the marketing or this, or it needs to cover an A to Z, from government, stakeholders, markets. So I had a marketing guy, Dustin, was with me from the very, very early part, and so some of the achievements of Paladin were really, quite remarkable in the sense that we did our sort of funding through project finance. Project finance meant you had to go through a torture mill of authenticity to actually qualify for that on a product that you couldn't hedge and get contracts on. So we broke many much ground in terms of even getting that project financing going. So we were cleansed in a way in terms of what our projects were by these, the Society Generales and whoever coming in with us, and you think that on all of the way, in terms of negotiating, in terms of government, in terms of community, explaining the story to people, being involved with sort of government organisations, the representative of the industry, we ended up as a fully fledged A to B mini Cameco, if you like.
Right.
And we could match it with anybody in terms of what we were doing.
Right.
So there were many achievements that I bring, and my team bring, all of those things that are hidden to the normal investor.
But that was then, and this is now. So do you think those things still apply, or do you think
More so.
that actually everyone's doing that now?
More so.
Everyone's capable of doing that.
Oh yeah, is that right? Is that
you
right?
Tell me.
Well, you only have to look at who have promised what they've promised in the last 5 years, and two, which I won't mention, are out of the frame, right? And because that's the reasons why their anticipation and expectation has fallen through, because they didn't read this complicated map of what it needs to go through. So, and it's, in fact, if anything, it's harder. If anything, it's much more complicated. You're on notice. You've got the iPhone clicking away, doing things, whether you're operational or doing all sorts of things. So you really need to be even more careful. It's even more complicated how you get your story.
So tell me this. People are trying to draw parallels on what happened back then versus today. They're banking on it, okay? But as a result of drawing on those parallels, they're thinking the price is going to pop maybe even before Christmas, maybe in the first quarter. You don't think that?
No, I don't think that. And I'm sort of playing a tough sort of game, because I have an opinion in terms of when the price will turn, but I have to act on the shortest window that could happen, because I can't leave myself exposed in that, to be fighting acquisitions on an upturn. So I do believe there is I hate giving sort of times, but let's for the sake of this conversation.
Let's do it.
So 12 to 15 months, I don't think much will happen.
I've heard that from one other group.
Yeah.
Mainly on the, let's call them a research fund.
Yes, yeah.
Not analysts say that, but a lot of the companies won't survive, will they?
Well,
they'll need someone like you to come along.
Yes, and it needs a combination of that, and it needs. Look, I don't want to go into too much what the strategy that I've got, but the post-Fukushima is not just restart. The post-Fukushima period is a period for repair, a period to reset, a period for consolidation. When you look at all the tough times that have happened in the nuclear industry from the 1970s, each phase has ended up with severe consolidation. This one hasn't quite happened. There's been, the 400 companies to the 50, 60. What that meant as a consolidation is they all went into lithium or into, which is a fine, and that's the power of the junior market is the ability to be
and
flexible.
Lithium to cannabis. That's great.
Boom, and cannabis, and that's right.
Okay.
And but so in our sort of business, these. I lost my train of thought, but these companies now, the 50 or so companies, look, there has to be a fatigue set in. I'm looking at the future with such optimism, but I think realistic optimism.
But you need to be optimistic.
Yes.
Shareholders, shareholders who have invested 2 years ago, a year ago, in this space, expecting it to go because the fundamentals are there, the macro stories there. It just isn't happening. So, what should they be thinking and doing? Surely the obvious thing is, well, I'm going to take my money out, invest in something which is going nickel, was cannabis, was cobalt. Lots of ways they could have made money in the last 2 years, and then still come back in at possibly even a lower point.
Well, the big problem is,
right?
Yes, but the big problem is now they've suffered it in over 2 years or 3.
Oh, no.
So you're closer to wherever this thing is, you're closer. So to actually abandon, so you really need to strategize and say, look, I'm going to rejig and look at where I think the real upside.
This is the constant turmoil.
I know.
We see this with investors. They go, I can give investors exactly the same data. And if you're invested in the company, you'll read it as a positive because it needs to be positive. And people who aren't investing and go, I don't really like that. So it's the same data. And I think there's that emotional buy-in, certainly from retail, family office, high net worths, and some funds actually. And I'm not sure that's the smartest way to go about looking at this. So that's why I'm fascinated about what your view is on why to invest now versus if you're saying price ain't going to pop for 2 years, I can still come back in at a reasonable price in a year's time, surely, if your data analysis is true. So why should people invest in you?
Well, I think that they to position themselves to become part of the ride. Why did these 3-4 funds come in the last week? Because they need to lock in and then be able to participate on market cap, and how much they can put into the
preferential option.
Yes, and all of the. Oh no, they haven't. But the if our market cap doubles, they can then to maintain.
There's a lot of ifs there, right? But the reality is the share price has been coming down, like everyone else in this space, because it's price dependent. There's not too much you can do right now that will affect the share price positively. But if you don't have those things in place for when the price does come, you're left behind. Because what is essential here? Is it how close you are to producing? Are those the people who are going to win?
I think that what it is to have a more realistic approach. I mean, you have to put a uranium price on your future projection upon which to base when you're going to come into production. So it's not a phantom thing. And look, let's look at it. You've got, let's say, 15 companies, 30 that in their brochures. Are all somehow going to come in 2023.
They're all winners. They're all winners.
Now, how is this going to happen?
I'm not sure it is.
See, but what will happen is there will be some, there will be others, there will be some that are better at a higher price later. And so it's a time equation. It's not just what you've got, but where that fits best into a price projection.
There are so many moving parts, which I think investors in uranium need to understand.
Yes.
The basic rules of mining apply.
Yes.
We'll agree on that, okay? But on top of that, the price discovery is really important because it helps you define when companies can economically, at whatever level, get into production of, and that also affects how much mineable ore is there. Because at $40, there's not a lot of mineable ore economically, but at 70, there's a whole bunch more, right? So you need to look at companies in terms of what's available to them, and then your bit, which is, how do you get this into market? How do you sell this?
Well, that's the advantage we believe I have.
Okay.
In the company.
I think you do.
And that is, I have already got a sort of a connection into that area. What these utilities want is a surety of supply. Not only to sort of learn off your hopes, but they need, if they're going to commit so many pounds to you in 3 to 10, 8 years' time, and what do you need to actually believe that on a product that the consumer can't hedge, or so he has to say, I'm going to actually now, I take a risk analysis of this company, but I have to get some others from another company to make sure I'm not caught up in a shortage. So all of these things mean credibility, having delivered history, make a huge sort of difference in the uranium space. It's not just, if you believe as many analysts do, in terms of coal in the ground and tons on the train is a given. So that's one. Copper, tons in the ground. Oh yeah, that's just no question. It'll go into the refined product. Gold, the same. Ounces into ingots is no problem. There's a whole lot of expertise. Those people that think deposits, pounds in the ground, are pounds in the can. Never mind those cans then going to where they're going. If that is the simple understanding, and I blame a lot of analysts on this, because they think, oh well, in terms of future production, it's the deposits that are there. And so when I was in Paladin, there was 400 companies, of which 300 were saying we're going to develop. Of those, 5 projects were started, and only 2 reached their nameplates. That was the Paladin ones. So there's an attrition of those even that start something fail. You know what I mean? So now do you think the story has changed, where so many people are saying what they're gonna do, that all the gunners are going to turn into pounds in the can? No. So, and that's why I think there's a reason to argue that consolidation has to be, because it's good for the industry. You need long-term producers. You've got Rio essentially coming out of the market, and nobody appreciates how vitally important that has been, and what a vacuum it leaves in the world, because the Cameco is a multi-project, got diversity, and it has all of these things. That's what I try to make with Paladin. It was the only company of the juniors that actually framed its evolution on that and the value of that. And that opened up a lot of doors for us that wasn't open to other companies. And those doors are still open.
Well, see, I think that's great. And we should probably wrap up, because I know you've got meetings to go to. We've got some more people joining us shortly. What I'm hearing is it's a slightly different business model from Paladin, in that what you're saying is, we're going to be an aggregator, a consolidator of existing developed assets at varying stages, but not in production yet, because they don't have the capital or know-how yet. Okay, but you're going to bring that to the table because of what you learned at Paladin. Okay, so now I understand what your business model and why you're different from a lot of people out there. It's a portfolio approach.
And with a real credible delivery. And there's one thing I just liked in closing off. My lesson learnt with Paladin. The whole evolution of Paladin right up to Fukushima was on song. It was very much in parallel to FMG, but it was debt driven, you know?
Yeah.
So when the event happened, I, like many others, thought, oh, this event is only going to be 3 years, 4 years, because Chernobyl didn't really rock the boat and destroy. And I held on and held on.
Yeah.
And then the debt started controlling the company, because we were still a $3 billion company at that stage, and I could have just wiped it out and gone on. So my caution in the next, not in terms of what I know how the industry and what I think I can see in an opaque industry, I'm confident. But debt for me is going to be a real, I'll be very, very cautious about it.
You're going to be watching it.
Yes,
That's the big learning.
Yeah.
Okay. Great stuff, John.
Thank you very much.
What a great story.
Pleasure to
we
be
look
here.
forward to staying in touch.
Yes.
Let us know how it's going, because I like the way you're positioning it. Now you got to deliver it and find some cash.
Yeah. Yes.
Because everything else is easy,
that's
right?
on the way. That's right. Everything else is easy.
Thanks very much for watching. We hope you enjoyed that. And if you did, please click the button in the corner of the screen to subscribe to our YouTube channel. You can also catch us on our website, cruxinvestor.com, and Cruxcast, our podcast series. Plus, most days you can catch us on LinkedIn and Twitter. We'd love getting your feedback, so please keep that coming, and we'll speak to you again soon.